Hi there, traders, and welcome to Trade the Structure. So, what we're going to talk about in this short video is traps and how to avoid traps that are set up to get traders on the wrong side of the market. Not only to avoid them, potentially to take advantage of the setup, okay, and trade in the opposite direction, obviously. So, we saw a really nice one play out. We've got here on the screen the SPY 200, which is a derivative of the ASX 200. All right, and I'll show you another one on the Hang Seng, or some action on the Hang Seng for intraday action. Right, so what we've got is coming into the session. You see in the US session, the market had sold off, and then you could see it just grinding down, holding lower highs all the way down until it ripped higher. Okay, this is towards the close of the US session, coming into the start of the day in the Asian market session for the ASX. Then you saw this sort of grind lower. Now, what I like to think is when the market sort of ripped higher, and you've got all these sellers built up, the market rips higher, and then all of a sudden it sort of grinds down again. I'm looking for another leg higher potentially. All right, but you've got to be wary of traps that are set up. You've got to know what sort of price action you're looking for before you start to jump in long. All right, so what we saw, I've marked up, and I've sent this out in our prep work in one of the blog posts that I send out each morning. You can check it out on the website, www.tradethestructure.com, or just look through the blog. You'll see, join us on our Discord channel. You'll see it all in there as well. So you can see the market, there's basically two levels I was looking at. For you see, if we're going to break up through the top side, I would ideally like to see a bit of a flush of that level and then ramp itself up and then start to hold a higher level and then look for a long position, okay? Or you see the level at the top side, you can see that the market, if it's going to hold that, they can sort of flush up through and then just start to drop. What you're seeing is the market start to press down, and we're probably going to be looking down to these lows. Now, as it turned out, that's pretty much what it did. But the trap itself was, what you can see here is you can see that basically sellers are built up in here, okay? They built up in here. And all these sellers that have come through here as well. And what you can see, that this price action to me looks kind of more bullish than anything else. So you'll see that if you've got a breakout to the top side, what that's going to do with this kind of price action is going to bring in some buyers. Buyers are going to see the open, see the breakout, and technically stock traders love the market when it's going up. They can't handle it when it's going down. So they're always looking for bullish, any sort of reason, a bullish action to sort of go bargain hunting, I guess. And that's the perfect market environment, what we're in. So you can see, as we came along, the market sort of popped up, right? So it's broken through that top side. So what we know is that the market is definitely, it's brought in some traders on the long side, brought in some breakout traders, and potentially just squeezed out a few sellers just in here. But I don't think sellers are going to come under pressure until we get to, this is sort of the key level, where once we get up and through that level, then sellers are going to be under pressure. You're going to have to rethink. So anyone that's been selling it in here, they might have added to the position down here, and then it's got this bounce. They're probably the ideal spot to have your stops is just above that level. So until we get up through that level, I don't think we're going to get under the pressure. And as you can see, the market started to toy with this level. What it done is break up, drag in some buyers, trap some buyers just above this level, and started to basically capitulate after that and really ramp to the downside. And we tested into those lows. So you can see that the trap was basically on the break. You can see this action that was set up coming into the close was nice. You got this little ramp up. So traders are basically expecting if you can see that, another ramp up like that, somewhere off those lows, and then looking to, nice little long trade up potentially into these highs somewhere around the, 775 level, at least 750. So you've got potentially quite a bit of fat, but instead what we got is dragged in, the anchor to this down move held, and we trapped some traders long and turn around and squeeze them all back out again on the move down. Okay, so that was the first one. What we'll go over to the Hang Seng now. Okay, so we'll start with the start of the session. Of yesterday's session. So the Hang Seng was closed a bit. You've got this gap down, and we got this low put in place. Now, this was prior to the futures market open. It was all on the CFD price, and so you can see them sort of mucking around with the levels. What the market did is pump up. Now, this is the open at 11:15 Sydney time. Not that candle, but the very next red candle. So you've got the low put in place. The market comes down, pops up, and it's looking like it wants to go down at this stage. Before we just got this big green candle. This is on a 5-minute trade. It starts to go down, pops up, holds a lower high, and goes through the low. Now, all it did really was pop through the low on a very small scale, okay? Took it out by a few points and turn around and ramp straight back up again. And one thing I'd like to look at is the momentum, especially on the 5-minute chart. So I'm using the 5-minute chart for my, my key levels, my bias for the market, and I'm trying to trade off the 1-minute time frame when they, you got confluence between them both. And what you see here is that the MACD or the momentum was saying it was pushing up. Okay, we've got this gap down. So from the gap down, the momentum's starting to lift off this low, starting to work its way higher. You've got the open, press down, momentum's still up. So what I'm looking for there is really just a trap. I don't want to go short in there, especially from my lower time frame charts. I'm trying to stick with momentum on the 5-minute. And as it played out, we flushed through those lows only by a few points or so, trapped some shorts into the breakout trade, and then turned around and reversed them. So all those shorts that were built up, especially from the open, built up prior, and built up, from the breakout trade, have to turn around and buy the market to get back out of their position and buy it back up. So you can see that was one, and you've got a similar scenario here. Although momentum's coming down, I like it when it comes back down to that zero line. All it really did was, you can see that momentum's probably triggered some traders into the market, expecting a bit of a move back down again. It's come back down into, that's the anchor for the uptrend. Okay, so you can see that sort of higher lows holding, higher low holding just in here, and now the extension up. The market's ground its way all the way back down to that low, flushed it by a few points, and then turned around and headed back high again. So what we know is that is ideally triggered some stops from any longs, and also triggered some sellers into action that think it's going to break down, and they turn around, they get trapped. Okay, then the market starts rallying again. Right, so you're looking for these sorts of zones. Now, I don't really like trading off that. I mean, I don't think that's nice price action. If I want to trade off a lower high, I want to see at least a retest somewhere near the top side. Okay, and I want to see momentum down, and then I'm looking down my lower time frame charts to get on the right side of the action. All right, so that's another trap. You've got another same sort of scenario here. The market's pressed up. That's the anchor to this up move. Okay, it's pressed up, flushed down through that low, and started to work its way back up again. So same scenario as previously. You've got the sellers getting put into action with the break of the anchor, and also some buyers that have been buying up. They've got stops below, may or may not have, that's only a small flush, but you can see that may or may not have been squeezed out of the action there. All right, so if we keep going across, we've got a nice little setup here. Okay, so this was from the start of the US session. I just want to highlight that a bit better. There you go. Now you can see sellers have come into the action here. Okay, we've got this lower high coming to play, and I think that was just after the start of the US session, and then more sellers coming in. So at that stage, the bias is down, sellers are piled in, they're outnumbering buyers, the market's moving down, but they've all got positions. So you've got to know where the risk is going to be. All right, so what we've seen here is that, okay, we get down to this low and we start to pop up, we start to test into the lows, bounce back up again, trade it slightly through that high, come back down through the low. So what we've done is traded through the low here, and that's trapped some traders. Now, if they're smart, they're probably going to have their stops just above this zone here. That's why I've marked it up as a key level. Okay, you can see that the top side of that box, or just the other side of the box on the upside, is the key level where you would expect from that price action to be stops held for any shorts, especially built up here. And probably more than likely that any sellers that are built up there are probably going to lower their stop to lock in some gains. So you know that there's a pile of buy orders there that are going to flood into the market potentially. All right, and you can see that. So once we start flushing through those lows, the key thing for me is that we got momentum. Okay, it's extended to the downside, and momentum started to fade. So you're not looking purely at the momentum fade back up again, but you're looking at the price action. So the market, if it wants to go down, there should be no reason why it should have flushed and bounced straight back. No reason why it should have flushed and bounced straight back. Okay, it should have kept going. The market should have kept going, and you would have seen momentum catch up with it and start to head to the downside. But instead, it kept getting supported. You get the flush into the level, support, flush into the level, support. So what that's doing is probably trapping sellers here again, all on the short side. They're going to have their stops above, and what you can see is this first little pop up triggered some triggered some buys. It's had a bit of a pullback. So you've got anyone that's got a bit of a wider stop might have it a bit higher, potentially above, around this zone, somewhere in here that might have stops. They're going to be thinking, look, I've sold in here, I've sold up here, I'm sitting on handy profit. I want to give it some room. I don't want to give it too much. As soon as you start to see this high low play out, okay, and this rejection of the move into the low, because that's your last dip. Once we get up through this zone here, and you start to trigger some of those buy stops, and you come back down, if it was going to be weak, it should go straight through those lows, okay? That should have been a flush. It should go straight through. As soon as we get this green candle and this expansionary candle, the very next one, and you can see that momentum is on the rise, you've got a high low coming into play. That for me is a prime entry. So if I could just mark that up there, this through here is a prime entry for me, just through the top side of this candle. I call it a HH2, a high 2. Prime entry to buy, because I know this price action. I know that sellers are stacked up here. Sellers stacked up through here, and they all have to get out sooner or later, and there's a good chance that off this higher low, and once we start to break back up again, if we put more pressure to the upside, they're all going to bail, and they're going to give me a handy trade on the upside. Okay, so pretty much that's what they'll be thinking. Oh no, I think I am wrong. Okay, so that's what traders would be thinking there. Once they start to see this high low play out and a couple of green candles, they're going to have to think seriously about getting out, because it failed to go down. You've got all these sellers here on the trap side as well that have been tracked in the action. They could easily get squeezed out, and that gives you the opportunity to trade to the upside. Now, It didn't go too far. It was in towards the end of the session, and I think the Hang Seng closed around 5 a.m. It didn't do too much after that, but you can see that even that trade there, you've got, if you traded on that break, you've got a risk of about 55 points or so, and you've got 135 the upside. So if you can take a 2 to 1, 110 points to 55 risk, I normally take 40 risk. I could easily get an 80 to 100 point gain on that one before it really started to come into some trouble, potentially somewhere around here. Once you start to get that breakdown, a couple of candles back, I'll be looking out for, say, maybe ideally somewhere around here. Whoops, somewhere around here. I'll probably look to exit, and that would have locked me in. If I measure that out again, would have locked in somewhere around 100 points. There you go. So easily 2 to 1. So you can see how understanding the price action, understanding momentum, and putting that price action and the momentum together to understand where traders are going to be tracked. And one of the keys is when the market's been heading down and you've got sellers stacked up, or vice versa. If you flip that over, you've got the market's been heading high, it's been trending high, and we're starting to fade. Okay, you know that there's a lot of buyers stacked up and they have to get out sooner or later. Okay, so that's what ideally you're looking for, those conditions when you're on the right side of momentum, when it's starting to fade and people start to realize they're on the wrong side. Okay, they're trapped and they're going to get squeezed out of the action. All right, that's pretty much a couple of little examples on the run through. Hope you enjoyed that. If you've got any questions, feel free to shoot us an email to tradethestructure@gmail.com, and look at the website, www.tradethestructure.com. All right, there's more free material on there. Sign up to a subscription or subscribe for free, and you'll get a lot more educational material there and a lot of videos. So if there's anything you might want to request also that you're having trouble understanding with regards to price action, feel free to send an email and send a request. And remember, jump on our Discord channel with our community. All right, and leave us a like. Much appreciated. All right, guys, we'll speak to you soon.